What is Forex? Foreign exchange. Let's just quickly cut to a video that will help you thoroughly understand what the Forex market is exactly. What is Forex? Let's jump straight into an example or a scenario that you've all probably been in, okay? So you're all packed up your bags, you're ready to go on holiday. Say with this example, you are based in the UK and you're ready to go on holiday off to the beautiful United States of America. So you're ready to exchange your pounds, your GBP, and then go and do a foreign currency transaction into dollars, right? You need dollars to spend over in the United States. You go to that exchange bureau and you say, excuse me, what is the rate please for my pounds to dollars? They give you a rate of 1.25 for argument's sake. So for every £1, you get $1.25 back, okay? So you exchange £1,000. In return, the exchange bureau give you $1,250 because the rate was 125. Now, you return back from holiday, say miraculously for whatever reason, you were treated by whoever when you went over to the United States and you didn't spend a penny, okay? So you still got this £1,000 that you exchange into dollars, so $1,250, you've still got that full amount of money. You return, when you left, the rate was 125. Now, upon your return, the rate has dropped down to 120, okay? So effectively, the pound has weakened versus the dollar. So the exchange rate has come down to 120. So it's pound weakness versus the dollar. So you then exchange this dollars that you've got, the $1,250. You give that back to the exchange bureau, right? To get pounds, right? Because you've returned back to the UK with a new rate of 120. So $1,250. When you convert that back to pounds, that gives you a rate, or that gives you a pound value of £1,041.66. So what we do to get that is just divide, we do $1,250 divided by 120 gives us this figure here, £1,041.66. So that effectively means on your initial currency that you had exchanged from pounds to dollars, you've actually profited. You've gained profit. On your capital of 41.66. Reason why, as you were holding an asset which appreciated in value, in this case a dollar, okay? Because remember we said when we first went, we got a rate of 125. When you return, the rate dropped down to 120. So that was pound falling versus the dollar, okay? So you made profit on those dollars, returning it back to GBP. So that is effectively an example of what Forex is, and I'm sure you've all been there when you've been on holiday. And in terms of this rate, this is what you will be speculating on when you're trading foreign currency. So you're speculating either that GBP dollar rate is going up or is coming down. So I hope that explanation helped you really understand what exactly Forex is about. Now, step one. Where to learn. You need to learn how to trade, how exactly the foreign exchange markets work. And there's a ton of free resources out there in terms of education. Just simply go onto a search engine, Google, type in free foreign exchange trading education. There will be plenty of resources out there. If you want stuff more visually, well guys, you can check out YouTube. You've got content creators like myself pushing out a ton of value, how-tos, so on and so forth. So it's really key that we get education right firstly before starting to participate in the market. Step two, once you've done that education and you've learned how exactly to trade, then we should set up a demo account. So what is a demo account? Essentially, it's known as paper trading. So we're trading with money that's not real, okay? It's just a demo. So we're taking exactly what we've learned, all of our learnings, and putting them into practice by demo trading first. Step three, once we've then learned how to trade, we've then tested out what we have learned and we're comfortable enough, then step three is capital, okay? We need real capital to trade with so that we can eventually go on and be profitable and make some money. So I always say it's important that you set aside what you can afford to lose because, of course, you're not going to get everything right when it comes to trading. There are going to be times when you're going to lose, particularly even if you're quite early on in your journey, you may be losing some money before you are able to get yourself to a stable position where you are constantly extracting money from the markets. Step four, Forex broker. Now, this is who's going to be essentially a company that will be conducting your trades, or they'll be handling that side of things. So when you're clicking buy and sell, a Forex broker is essentially the one who's going to be handling those trades that you're placing in this live foreign exchange market. So I always say it's really key that you pick a broker within your jurisdiction. So for example, if you're based in the UK, look at the FCA, okay, the Financial Conduct Authority. If you're in South Africa, look at the FSA. It's just best to stick within your jurisdiction to have a maximum potential protection in case the worst were to happen. I'd suggest avoiding unregulated brokers for obvious reasons. The next step is having the terminal to trade with, okay, which is either MT4 or MT5 particularly. Now, this is just the technology which you'll then plug in with whatever broker you choose to use. You can download a demo, just type it into Google, MT4 or MT5 platform demo. Be able to download that and just familiarize yourself with this, because this is where you're going to be active. This is where you're going to be buying, selling, trading the financial markets through this technology. So it's really key that you get to know that like the back of your hand, in and out. And the final step that I want to mention is psychology, mindset. This is heavily overlooked in trading. I'm really disappointed that it does, because a lot of people that come in contact with me, I help sort of them on that side of things, and it's psychology. Trading is around 80%. Okay, of psychology, because look, mindset, if we don't have stable mindset and able to keep our trading emotions in check, then we're going to lose money, right? I'm not saying don't have emotions, but I'm saying keep them balanced and in control. For example, you're going on a massive winning streak and then you think you're invincible, so you start trading more volume. And then eventually you get humbled by the market, and that ego quickly gets shut down. Or for example, you are on a bit of a losing streak, and that happens. Sometimes our strategies just don't suit current market conditions. So then you're unable to sort of deal with that, and you start chopping and changing, going off track, and then things just get worse. So it's really key that you do a bit of research on trading psychology and try and keep those emotions in check. So I hope that's giving you a good explanation and you thoroughly understand what exactly Forex is, the foreign exchange markets. Thank you very much. This video is brought to you by Skrill, an online wallet that allows traders to make their money move. Go to skrill.com to learn more and subscribe to the Skrill YouTube channel to see when they post more educational content like this.